Today we will be covering the basics of banking. This lesson will cover the essentials of the Indian banking system, introduce different types of bank accounts, and guide you on how to make the most of banking services as a university student. Let's break down the key elements of banking so you can start managing your finances with confidence and foresight. Let's get an overview of what all the Indian banking system entails. The Indian banking system is vast and its foundation lies on the shoulders of the Reserve Bank of India. The Reserve Bank of India is India's central bank that regulates the country's monetary policy, ensures the stability of the financial system and the banking system, and controls the supply of money in the entire Indian economy. If you've ever looked at an Indian banknote, you've probably noticed that it is seen as a promise printed on the note. I promise to pay the bearer the sum of 100 rupees or 200 rupees, which is signed by the governor of the RBI. This promise symbolizes the trust and authority behind India's currency, ensuring that the money in your pocket holds value backed by the promise of the RBI. Banks in India, RBI, broadly categorized into various types. Each serves a different set of people varying financial needs. Understanding these categories helps you choose the right bank and the right banking services depending on your financial goals and requirements. Let's cover types of banks in India are majorly classified into the public sector bank, private sector bank, foreign banks, regional rural banks, and corporate. Lately, we have also found there are small financial banks which have been on the rise. They are also catering to a very different set of target audience. Let's explore these in more detail. Let's understand what a public sector bank is. Public sector banks are owned by the government and among the most trusted institutions in the country. They include household names like State Bank of India, Punjab National Bank, and Bank of Baroda. These banks have a strong presence across India. Their bank branches are spread even in the remotest of the rural areas. They provide a range of services from basic savings accounts to loans and government-linked schemes. Public sector banks are specially known for their reliability and they tend to offer lower fees, making them accessible to everyone. If you already don't have an account, you can always open an account with any banking institution based on certain set of documents. For more details about these documents, you can refer to the link in the video. If you're 18 and above, you don't need a legal guardian. If you're below 18, you are a minor and would require either of your parents to serve as guardian. For more details, please refer to the link given in this video. If you're opening your first account, a public sector bank is a good option to start due to its straightforward services and wide network. Private sector banks are also a very good option to begin with because their internet banking is pretty amazing. Banks such as HDFC Bank, ICICI Bank, Axis, and Kotak Mahindra Bank are some of the reputed private sector banks and are known for their customer-centric approach and advanced digital banking platforms. While they offer a similar set of services that public sector banks offer, they do have more advanced offerings available to common public. Another feature of private sector banks is that some of these banks would offer you higher interest rates on deposit and more flexible financial products. However, both public and private sector banks nowadays offer the similar kind of services. you could probably check out the various banking websites and the services and the products offered. For example, you could check out what's on HDFC Bank. You can also check out what's available on SBI. For tech-savvy students who prefer managing their accounts online or through applications which are mobile applications, private sector bank mobile applications are much more convenient and up-to-date in information technology compared to other banking offerings. Private sector banks offer loads of convenience and modern services at your doorstep. Both public and private sector banks offer 24/7 customer support and seamless mobile banking. So, if you are interested in opening a bank account, if you do not have one, you're a major, you can open your account using a set of documents which would be listed in the link below. You can learn your modes of operation as well as figure out what are the safety measures to be followed and how to operate your ATM cards and so on, or internet banking. Now let's move on to what are foreign banks. Foreign banks were initially set up where a certain stake was brought in by a foreign bank. So foreign banks typically establish their branches in India. These banks are reputable names such as Citibank, Standard Chartered, and so on. They operate in India but have their headquarters abroad. Typically, they provide services for high net worth individuals and multinational corporations. Many of you students would already be having accounts with Citi, probably Standard Chartered, and so on. You could check with your parents regarding the same. They're also helpful for students, professionals who may have international banking needs in the future. These foreign banks tend to offer global financial products which are helpful if you're planning to study or work abroad. This does not mean that if you have your banking needs within India, you cannot open an account in a foreign bank. The only issue will be you need to maintain large balances with them. Plus, it's more convenient if you have needs where forex is involved, or probably you are traveling abroad frequently and you need to have a tie-up even for business needs. So that's where a foreign bank comes in handy. Let's now move on to a next kind of a bank, which is called as a regional rural bank. These are established to serve the rural areas and promote financial access and inclusion for farmers, small businesses, and rural households. While you may not interact with regional rural banks, henceforth RRBs, during your college years, understanding their role is crucial in India's mission to achieve financial inclusion. Financial inclusion has been a very important goal for the Indian government so that banking services are provided to every individual residing in India. Lastly, cooperative banks is what we are going to cover. These banks operate under a cooperative model where the members, who are typically called as account holders, own and manage the bank. These banks focus on community-based banking and are particularly helpful for agricultural and small-scale industries. They tend to provide loans for various community-based business houses for people belonging to a certain set to approach. Cooperative banks serve both rural and urban areas, and they play a critical role in providing financial services to underserved populations. In case you want to know which all banks are covered under RRBs, under cooperatives, there's a link provided from the RBI website which gives you a detailed list of these. In case there's a cooperative bank which is operating today, it is not certain that the same cooperative bank may be operational tomorrow. The RBI keeps a closed loop on public sector banks, private sector banks, RRBs, as well as cooperative sector banks. Now let's move on to what kind of banking accounts can you open with each of these variety of banks. The first type of banking account that can be opened is typically a savings account. Now you may wonder, why do I need to know about a savings account? As a university student, one of the first financial decisions you will ever make is choosing the type of bank account that suits your needs. Your need depends on typically withdrawing money, making probably payments to the institution or probably to your friends, or going and spending at restaurants or at various retail outlets. Banks typically offer several types of accounts which are designed for different purposes. Understanding these aspects of the accounts is crucial to managing your money effectively. As a student, a savings account is the most common type of account and is ideal for depositing or storing your money, while you may earn a very small level of interest on these amounts that you have deposited. Savings accounts are typically easy to operate. There's a quick access to funds 24/7 provided you have funds in the account. You can use it for your daily expenses, emergencies, typically for daily transactions. But there's a limit in terms of how many times you can withdraw and how many times you can deposit. It's not a business account, it's your personal account, right? You can save for a trip, you can have zero balance accounts, typically which are offered for students, meaning you don't need to keep any amount of money in the account. In a zero balance account, it will not attract any penalty if you have zero amount in your savings. This is specifically useful if you're a student, you receive pocket money, and by the end of the month, you may be done with all your pocket money funds, right? So you will not attract a penalty on it. Savings accounts also comes with a ATM or a debit card, mobile banking and internet banking facilities if you opt for it, making it easy for you to check your balance, transfer money through RTGS, NEFT, and pay bills on the go. This is the most basic yet essential account for students who manage their allowances or earnings from internships or part-time jobs which they may take up to fund themselves. The second type of account is more likely for business houses where you have numerous business transactions on a daily basis, and typically you have deposits and withdrawals on a continuous basis. Current accounts are mostly set up by business houses, proprietors, and even companies. All right. You may or may not earn an interest rate on the current account. You could check out the websites of various banks to see, but original thought is that current accounts should not earn an interest. But they allow for a minimal set of transactions, and it also comes with the feature of overdraft facilities. For example, if you have zero money in your account, you are allowed a credit facility which is called as an overdraft, and based on your credibility, you may be able to withdraw more than that zero. So that is kind of a loan they offer to you because you have been a good customer. You can check with your parents and ask them whether they have overdraft facilities and whether they do have a current account. For most students, a current account is usually not necessary unless and until you are involved in business related activities or have frequent high value transactions. Now let's look at the third variety, that's a fixed deposit. You've received 1 lakh rupees as your pocket money. It was your birthday month. You spent roughly 30,000 out of it on your party, 10,000 for your monthly expenses. You are left with a good 60,000 rupees in your account. What do you do with that? The options available to you is either you do a fixed deposit with the bank, which gives you a certain higher interest rate than your savings for a specific period of time, or you may want to invest your money on a monthly basis through a recurring deposit, which will again give you a certain interest rate which is higher than your savings account. Another facility which is available to you when you have excess funds is a MOD, where up to a threshold in your savings account, for example, if you have 1 lakh in your account, 10,000 is kept as the balance. The remainder 90,000 goes in as an MOD. This 90,000 is going to earn much higher than what your savings account is going to pay as an interest rate. However, you can withdraw this amount at any point of time without attracting any penalty. Now let's understand all these three varieties as we go ahead. So what is a fixed deposit? If you want to grow your savings over a period of time, a fixed deposit account can be created. You have excess funds, it was your birthday month, you received 1 lakh, you spent 30,000 on your birthday party, 10,000 was your monthly expense, remaining 60,000, you use that lump sum and create an FD for a period ranging from probably 90 days up till 10 years, dependent on whatever you feel like. They're going to be offering different interest rates for different fixed periods that you put your money away for, right? However, you can't access the money until the deposit matures, because if you try to break your fixed deposit, that is FD, prior to maturity, it will attract a certain amount of penalty. However, if you're in urgent need of funds, you can break your FD and pay a penalty for early withdrawal. However, you have to be cautious. If there's a joint FD, you have to make sure both the parties have to sign and submit it for early withdrawal. Otherwise, the amount gets credited to your account only upon maturity. For students, FDs are useful if you have a specific financial goal, like going for an Arijit concert or a Diljit Dosanjh concert or a Dua Lipa concert, AP Dillon concert, and so on, or probably booking lounge tickets, buying a laptop, buying a Gucci bag, and so on, or saving for any specific event that's going to happen. Simultaneously, you can also opt for a recurring deposit, where you keep on investing a certain amount of money, that is fixed amount of money, regularly, typically every month. You are not going to be receiving 1 lakh rupees as pocket money every month. That may be only once in a while. So when you receive 1 lakh rupees, your 60,000 can go into an FD. But if you receive your pocket money on a monthly basis of 10,000, presuming you are a very, very prudent child, you only spend 5,000 bucks, you have 5,000 extra remaining with you, you can actually opt for an RD, that's a recurring deposit, which helps you build savings gradually. Now, let's take an example. If you're earning a stipend, or if you're saving from an internship, or if you're saving from your pocket money, you can deposit this excess portion into an RD. You can make the RD for 12 months, you can make the RD for more periods of time. It depends what amount you choose. Your interest rate will vary based on the period as well as the amount that you're depositing. Both FD and RD accounts are excellent tools for bringing in discipline in your saving habits. So, rule number 1 that comes in is, these type of accounts are not only to save money but also to inculcate a habit of saving. So while FDs require a one-time deposit, RDs inculcate a habit of saving consistently, making it easier to accumulate wealth over time. However, the interest that is received by you on these RDs, FDs and savings deposits are taxable under the income tax. So, if your income is under the income tax purview, you will have to pay tax on them. The next type of account which we are going to cover is a student account. Many banks tend to offer student-specific bank accounts. Let's understand what is a student bank account. These accounts are designed with the needs of young adults in mind, and they typically have zero balance requirements, lower balance requirements, lower fees for transactions, easier access to digital banking services. They also come with perks like free debit cards, which is also available to every account holder who opens. So, for example, if your parent goes and opens an account, they would also get a free debit card. If you want additional services on your debit card, you might have to pay some extra fees. Some banks even offer educational loans linked to student accounts, making them an attractive option for those looking to start their financial journey with flexibility. Now let's understand what are the banking services that are offered beyond banking. Banks offer more than just a place to store your money. As a student, you likely benefit from various banking services that go beyond simple savings. For example, mobile banking and internet banking platforms allow you to have access to checking balances, transferring funds, and paying bills in real time, all from your smartphone. Even if you don't have a smartphone, the button phone also has very similar services. For example, some of these banks offer you options on your button phone to transfer money. These services have become essential for managing money on the go, especially when balancing a busy student's schedule. It's important to know that your money is safe, that you have money in your account, and if there's a certain emergency, you can go to your banking provider or an ATM and withdraw money. Banks also offer credit cards and personal loans. However, as a student, you may not have the credibility of repaying. So your parents' credibility serves as yours. While credit cards offer convenience, they also come with the responsibility of managing money wisely, because this is pure debt, which is very, very expensive. Many of the credit card providers, such as all the banking institutions, tend to offer you this money at almost 3 to 3.5% per month on the balance that remains unpaid. For students who are starting to build their financial independence, one small suggestion would be, please go debt free. Debt is not the way to go, because if you have $1,000 which you've taken on a credit card, 3% on 1,000 would be $30. That's what you will pay. And if you don't pay up that $1,000, it'll incur charges again and again. Learning to manage credit is very, very essential, rather crucial for every individual, whether student, adult, working professionals. It is immaterial which category you belong to. Banks also offer investment opportunities like mutual funds, where through the banking services, you can invest in a particular scheme offered by a mutual fund house and invest small amounts of money on a regular basis, called as a systematic investment plan. This helps you grow your money early, and since you're interested in learning about investing, more details of it will be shared in subsequent videos where we will cover mutual funds, what are SIPs, how does it compound, and how does it help your money grow. Now, the next item that we're going to cover is how to open a bank account. Opening a bank account in India is a very simple process as far as you have all your documents in place, specifically for students. Let's take you through a quick guide on how to get started on opening a bank account. The first important question is, choose the right bank and account type. What type of an account and a bank best suits your needs? For example, if you are going to a university which has access to a banking service ATM, you don't need to have the same bank account as the ATM provider. For example, in the university, you have Bank of India. You also had Axis Bank. You could have any public sector bank account like SBI account or PNB bank account. All you needed is an ATM card to withdraw your money. The important factor to keep it accounts typically come with added perks. For more details, there's a link to a few of the student accounts offered by some banks and you could go through. In case you don't have a bank account, make sure you try to open one, but keep your parents informed. Reason being, they are the people who are providing you money. So they should be aware and that's your responsibility. The next step is gather the required documents. You'll need basic documents like your Aadhaar card, your PAN card, you'll need to fill up the form and you need to submit these to the banker who's opening your bank account. Passport at times is considered as important, but your passport should be valid. Your proof of address, your Aadhaar can be Aadhaar card or utility bill, electricity bill. You need passport size photographs and a PAN card is a must for taxable accounts. Even if it's a non-taxable account, you need to submit PAN card for record purposes. You may apply for opening an account by visiting a branch of the bank or you can even open it online. Many a times there are instant bank accounts where they come and literally open the bank account and it's operational within 2 hours, right? So, all these services are available to you without the hassle of visiting your branch. If you're worried that you need to go to the branch to do KYC, there's also an option of eKYC. So you can even skip visiting a branch to conduct your KYC. However, if you prefer in-person service, you can visit the nearest branch with your documents. The only point is you need to fill in a deposit slip, make an initial deposit. Depending on the type of account, you may need to make the initial deposit. Student savings accounts often waive this requirement. So you are in a win-win situation.